Hey guys, Martin here from the Loan Room. Listen, just before I jump into this next video, make sure you hit that subscribe button and like it and leave us a comment. So let's get into this. Let's look at you as an investor or someone who's wanting to become an investor and you have an existing mortgage. Understanding the way the banks will then look at you and your circumstances is really important to know how much you can borrow moving forward. So let's have a quick look at a couple of different examples. Let's say you already have your home mortgage. For this example, let's just say you owe $600,000. So you will naturally have a repayment on that. So then when you go to a lender to see how much you can borrow as an investor, these are the things that they're now going to start to look at. Let's just assume you pay 2% on this mortgage, right? So you're currently paying 2% on your home loan. What's really important to know is that just because you're paying 2%, when you go back to the lender to borrow more money, they don't actually use these figures. Generally speaking, they're going to use approximately 5%. So you may think when you're doing your budget and you're going through your expenses, hey, my mortgage payment is $2,000 a month, which may actually be very true. But when you're then looking to borrow more money, the bank uses a margin of safety and they'll actually dramatically increase what your interest repayments are, which decreases your borrowing capacity. So they're really working on around 5%. Really important to know. Then when we go to actually get that investment loan, and let's say you want to borrow $500,000, so you got your investment loan here, $500,000. So a $500,000 investment loan, that rate might be 2.5%. But again, the bank uses a margin of safety and they're going to service you based on approximately 5 to 5.5%. So when you're then looking at your expenses and your repayments, the bank then uses, hold on, you have a mortgage of $600,000. We're going to use those repayments as if it's 5%. Now you're looking to borrow a further $500,000, even though the repayment might be 2.5%, we're going to use between 5 and 5.5%. So the bank's incorporated quite a large margin of safety for them, which decreases what you can borrow from your end. Obviously, other things that you then look at is, well, you may have a household income of $150. You can then add on rental income, and let's just say the property you're going to buy is going to bring in $20,000 per annum. The bank then actually shades this income at 80%. So they're actually only going to use for your ability to borrow $16,000. So as you can see, the bank keeps putting in margins that quite often can allow you to misinterpret what you can actually borrow when you look at your real budgets, not the way the bank does it. So whenever you're looking to invest, it's really important to understand the way the banks will look at you, your existing debts, and your future possible income. This is where understanding the right bank to meet your specific investment requirements is so important. You see, this is how some of the banks do it. We've got lenders out there, because we're a mortgage brokerage, we have around 40 different lenders, and they'll all look at investors very different. There's a few banks out there that will still take your actual repayments from your principal place of residence, meaning they won't actually put this margin on. That could mean the difference of borrowing an extra $200,000 to $300,000 when you go to look at that investment property. So it's really important, first, understand the basics. This is roughly what the bank's going to look at. Then understand, hey, what are you trying to achieve? And are you choosing the right bank that's actually going to get you towards those goals? Hey guys, this is where us at the Loan Room, we come in, we are experts in our industry at what we do when it comes to assessing your ability to borrow and then finding the right bank and lender to actually meet your requirements and help you achieve your goals. So if this is something you're looking to do, if you're looking to invest, you're looking to start or continue to build that investment portfolio, make sure you reach out to us here at the team at the Loan Room. We're more than happy to help you.